you'll come out ahead. In other words, if you dollar cost average over the last 20, 23 years from the beginning of this bull market, gold was at 252, now it's at 2000. Silver is under 5, and now it's at 23. So they're both up. So gold has outperformed silver at this point in time. I think we could see gold under 2000. I think it's more for psychological reasons that the mainstream press can say, oh, see, gold's under 2000. No. I don't see it going down a lot below that level. I just think it's going to be a good year for both metals. I think that is a place to look. That's the most undervalued sector right now. I mean, silver's the most undervalued commodity or money. But as far as the equity market goes, the mining sector is the most undervalued.
Gold recently experienced a notable pullback, attributed to tempered rate cut expectations that bolstered the dollar and applied downward pressure on the precious metal. As investors watch for cues in Q4 GDP and PCE data, the market sentiment hangs in the balance, and the silver downtrend is intact as the metal approaches vital support. DavidMorgan, renowned as the silver guru, offers a nuanced perspective. While acknowledging the potential for gold to dip below $2,000, Morgan maintains cautious optimism, foreseeing a promising year for gold and silver. JPMorgan Chase identifies a strategic opportunity in gold. Anticipating a potential U.S. recession, the banking giant predicts gold prices will surpass $2,000 per ounce by year-end. Looking ahead to 2024, JPMorgan envisions gold setting new records, driven by anticipated falling interest rates. Amidst these market dynamics, a seasoned approach has emerged in dollar cost averaging over the past 23 years. DavidMorgan advocates this method, using gold and silver as illustrative examples. Over the extended period, both metals have shown a consistent uptrend. Gold and silver prices have seen ups and downs over the past century. In the late 70s, silver surged to over $36 per ounce, but dropped below $10 in the late 80s until 2006. In 2008, silver doubled to about $20 per ounce. Gold had its journey from $730 in October 2008 to $1,300 by October 2010. Recently, gold climbed from $1,575 in January 2020 to over $2,000 by the summer of the same year, marking a significant 27% increase. Morgan's investment wisdom extends to the importance of a balanced approach, combining physical metal holdings with mining stock investments. While mining stocks offer the potential for significant returns, their susceptibility to dramatic collapses serves as a cautionary note. The key, Morgan suggests, lies in navigating the unpredictable terrain of precious metal investments with a careful equilibrium. Join us as we delve into insights shared by DavidMorgan. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you.
Most people that learn what's really going on should save in real money. And if you do it on a longer term basis, you'll come out ahead. In other words, if you dollar cost average over the last 20, 23 years from the beginning of this bull market, gold was at 252, now it's at 2000. Silver is under 5, and now it's at 23. So they're both up. So gold has outperformed silver at this point in time. So I think that's the approach. And then, things get rearranged. It's hard to say what the authorities will do as far as payment goes. I mean, in the 30s, which was a much simpler time and much more agrarian culture where many people grew food and had animal husbandry, much easier to actually survive because of that. But, they bartered, they traded, whatever. So we have that opportunity again. I really think that it's not a sure thing. I just, made a brief textual look at the book of Revelations. We don't know the timing, and we don't know exactly how it's implemented. And what we don't really get from that is, what does the alternative look like? We know there's people that won't do it. And so what does that look like? You just have to use your imagination. My friend Franklin Sanders, who's written a few books and does a newsletter, and he also is a precious metals dealer. Probably shouldn't say that. Sorry, Andy. But he wrote a book called Highland, and it's a fictional book, but it's really pretty accurate as far as what it would probably look like. And the people outside of the system use silver primarily. primarily, not in every transaction. And, that's a possibility. I mean, does it, mean much? Maybe yes, maybe no. I want to say one more thing. I had an update from my paid members, and a guy wrote me about, why he thought the silver stock should be much higher in price. And I made a video. I usually answer questions that are really pertinent to the entire membership by video, so everybody has the benefit of the question. That some of the proponents that, the stocks don't do as well as the metal itself. On aggregate, that's true. If you bunch them all together and average them, that's a true statement. But it's false if you know what you're doing. So, for example, my favorite gold company was $30 when gold was at 2,000 12 years ago. Now that stock's at 100. So it's up 300 something percent, and gold is the same price. So if you put your 10,000 gold in the year 2011 September, it's worth 2,000 now. But if you put it into my top pick for a gold company, it'd be worth 6,000. And then I looked at my favorite silver pick, and it did about the same. It doubled, and that is really remarkable when you think of this silver company that's doubled from the time that silver was at $50, because we're less than half of that now, and yet the price has doubled. So if you bought silver at the top of the market at 50, right now you've lost 50%. But if you bought that stock at the top of the market, right now that $1,000 investments were 2,000. So if you know what you're doing, picking, the miners or the resource sector, you can beat the market. And I just want to make that clear. I mean, I know I'm kind of touting my own word, but it's the truth, and it works. And that's why I think you should have a balance between physical metal and the equity side if you know what you're doing. And those numbers are facts. They're not made up. They're not wishful thinking. The problem is it's almost too simple. And once people learn that from me, say, oh, it can't be that easy. So they're always looking for that mother lode, right? That little stock that's 12 cents, it's going to go to $120, and they're going to buy their own island, And that happens, but not very often.
Despite acknowledging the possibility of short-term fluctuations in gold prices, Morgan remains optimistic, foreseeing a promising year ahead for both gold and silver. As we approach the new week, a glance at the daily chart suggests that if bears fail to gain control of the recent change in sentiment, there might be another test of the $1,985 level. This level coincides with the underside of the medium-term bearish channel. Morgan suggests that the prevailing enthusiasm for specific junior mining stocks could serve as a signal for calling the top of the market when it happens. Juniors are considered risky stocks because they may not find the gold or other metals they seek. Junior and senior mining stocks generally move in the same direction. Sometimes, juniors take the lead and grow independently of the most popular gold mining stocks. Other times, it may seem that gold prices do not influence them. Let's get back to the interview.
I went into the charts, and I'm not a big technical guy. I mean, I'm very good at it, but, it's just a tool. It isn't, it isn't perfect. I think we could see gold under 2,000. I think it's more for psychological reasons that the mainstream press can say, oh, see, gold's under 2,000. No. I don't see it going down a lot below that level. I just think it's going to be a good year for both metals. There aren't a lot of places to go. Real estate market, commercial side looks horrible. Even the residential side doesn't look that strong. Rents are frozen in some areas, but everybody's got to have a place to live. The equity market's still overvalued. A lot of the big names are getting out. I mean, Jamie Dimon, he's cashing out some stock. Zuckerberg has cashed out a great deal of stock and built his bunker. That might tell you something. So a lot of the big players, the insiders, are ditching the stock market, yet they're still making new highs because they can manipulate the stock market with 7 stocks, basically, and make it look good. So it's time to, get real, buy real, be real. All you can do is what you can do. In other words, there's a lot of stuff out of our control, but there's a lot of stuff that we still can do. And I think one of them is to tidy up your portfolio, keep it as simple as possible. I like to teach my members, really pick out 3 of the top tier stocks. 2 of them I just outlined, 1 or 2 of the mid tiers. And if you want to speculate, here's my best guesses. And I had a really hot hand for a fairly long time. And honestly, I haven't had a very hot hand in the juniors, but no one else has either. I did have Kirkland Lake during the kind of the dull mull period. And that was a 10 bagger, but that was only one stock out of the list. So, I can't pat myself on the back too hard for that. But I think that is a place to look. That's the most undervalued sector right now. I mean, silver's the most undervalued commodity or money. But as far as the equity market goes, the mining sector is the most undervalued. Well, what if, David, there's a big pushback and a big recession or whatever, which is another question I got, and the answer is, yeah, they'll probably drop a little bit more. But, when you're on the floor, if you're that far off the floor, you don't have a lot to drop, And that's kind of the analogy of where we're at. Could we go lower? Yeah, but we're not going to go down 90% from here. Can't. I really think one of the main problems we have, and I met you when I think you were 16, and just so proud to be friends. But you need to become more self-reliant. I think that's really one of the bigger problems that we have. And I help you with the due diligence. I give you a head start. I follow these companies very closely. I talk to management. I do interviews. I do all the things I can humanly do to help give you guidance. But I can't pull the trigger. And if you want to play in the junior-only market, then go ahead. But that's not the way you make big money. I know I did it. I started at a very young age, and I played the juniors only, and I lost my butt. And I learned that lesson the hard way. And that's why I teach what I teach. I do what I do. And people that follow my guidance, actually, even in this rotten stock market for the resource sector, have not done that bad. I'll look in the camera and tell you, because my members watch my stuff, both public and private. The last 3 years have been pretty bad. We're in a high level consolidation for those two stocks that I outlined, kind of like what gold's doing. It's consolidating at a very high level. But once we break out and go, these two companies and several more will really go as well. And the juniors will have their day in the sun. And when everybody's talking about XYZ junior mining company, I bought it for 4 cents and it's at 12 today, and I'm up 400%. Good for them, but be careful, because that usually happens at the end of the market. And I'll be using that as one of my signals to call the top when we get there.
HSBC anticipates a bullish trend for silver in 2024, projecting a price of $24.33 per ounce. The forecast hinges on robust gains in industrial demand, particularly from the photovoltaic sector, which is expected to offset potential decreases in jewelry and coin and bar demand. What is your forecast for 2024? Share your thoughts in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.